India is making strides in the global financial ecosystem with its recent inclusion in JPMorgan's Global Bond Index. JPMorgan has decided to include India in its Government Bond Index Emerging Markets Index, the inclusion of which will start on 28 June 2024. This move is significant for the country, which has been working diligently to achieve its ambitious economic goals. India aims to become a $5 trillion economy in the coming years, with plans to surpass major economies like Japan and Germany by 2030. To attain this, substantial investments are required, often exceeding the funds generated through taxation. Traditionally, the Indian government has relied on issuing bonds, primarily purchased by domestic investors, to raise the necessary capital. However, relying only on domestic investors can strain the finances of private entities as they compete with the government for funds. Recognizing the potential benefits of foreign investments, the government has been working to ease restrictions and attract foreign investors to its bond market. Foreign investors prefer investing in bond indices, consisting of bonds from multiple countries rather than individual bonds. JPMorgan's Emerging Markets Bond Index is one such index that tracks the performance of government bonds from emerging markets. Despite its significance, Indian government bonds were previously excluded from this index due to certain restrictions and requirements. However, in recent years, the Indian government has proactively addressed these concerns. Efforts have been made to remove investment limits for foreign investors, simplify the tax regime, and provide assurances regarding currency conversions. These initiatives have culminated in the recent inclusion of 23 Indian government bonds, worth about $330 billion, in JPMorgan's index. This inclusion is expected to attract significant foreign investments, potentially as much as $20 billion. While this is a positive development for India, it also comes with challenges. Foreign investments can be volatile, and rapid outflows could threaten the country's currency and economy. Nevertheless, the Indian government and the central bank are optimistic, believing that the potential benefits far outweigh the risks. This inclusion marks a significant step for India, integrating it further into the global financial market and paving the way for increased foreign investments. How often is the JPMorgan Global Bond Index rebalanced? To learn more interesting facts, download the UnacademyX app.